All right, guys, welcome to this new lesson. This one's going to be about risk management. So I made a few presentations over the weekend and I tried to simplify the ideas as much as I could. And I try to explain these things quickly because I personally hate looking at 20-minute videos when they could have been like 2 minutes. So yeah, let's go through this. So So this presentation is called Exposed, and it's just about overexposure and having too much of your eggs in one basket, basically. So when you're overexposed, it's pretty embarrassing. It's when you hold way too many coins, you hold way too many crypto-related stocks, you hold too many NFTs. You didn't listen to your mom when she told you to sell. You didn't listen to your wife when she told you to sell. Right? It's those times when you had the money in your hand, the profit was right there, but you let the market take it away instead. And when you're overexposed, it's a horrible feeling. It's like being caught with your pants down. It's really cool to have crypto and to be bullish on it, and to be part of this tribe of mentality where everyone thinks Bitcoin's gonna win. F the Fed, F the banks, blah blah blah. But it's not fun when your net worth is down 90% because of a new COVID variant, or because of a new war going on in Israel, or because of whatever's going on in the world, right? There's always instability in the world. There are always events that we cannot predict, that we cannot foresee. So you really don't know what you don't know. These are called black swan events. It's a concept from the book called Black Swan by Nassim Taleb. Shout out to Nassim if you know that book. But yeah, basically a black swan event is when there's an event that you haven't thought of, that you haven't considered. And if it does happen, it's super impactful. It's completely random, so you can't predict when it will happen again. And it changes everything, right? So an event like this was COVID. Anytime there's a war, like the Ukraine-Russian missile thing that happened a few years ago, like that was another black swan event. All of these are things that have deep impact and you cannot predict. So you always have to consider that when you're investing or putting money into anything. Is what if a black swan event happens, right? What if there's a cyber attack? What if there's an ice age? What if the meteor shower? What if anything happens? I personally think it would be a cyber warfare attack. That would be the next likely black swan event. But until then, we diversify. So diversifying is the same advice that you've heard from every financial advisor since the 1920s. Everyone and your mom and your grandpa has always told you to diversify, but you never listen. So it's the advice, when your parents tell you to, oh, why don't you buy a house with that money? Why don't you invest, buy a car? Why don't you, do blah, blah, blah. So diversifying is basically spreading your investments across various asset classes to reduce the risk overall. So if you have $100,000, you're not putting it all into crypto. You're putting some of it into crypto, some of it into real estate, some of it into a car, some of it into jewelry, et cetera, et cetera. So you're just spreading out the risk to diversify. The reason we do this is, again, because the world is random and we can't predict what's going to happen. It's not fun if Iran decides to go to war with, whatever country, and it makes Bitcoin drop 30% in a day. And you were hoping that you could use that Bitcoin money to pay off, your mortgage or your car. It's a really stupid idea to be all in on one thing, especially if it's crypto with how volatile it is. And especially if you're a grown ass man with a family and a mortgage, like you can't afford to take that risk anymore, right? So you have to diversify, and you feel a lot better when you know that your money is not all tied up in crypto. Some of it could be in an online business that you own, or, like a little side hustle that you have. Some of it could be in gold. Some of it could be in jewelry assets like Rolexes, watches, luxury things. The stock market, art investments, anything outside of crypto, you need to have your money in there to diversify. And to be honest, like, let's be real, the world hates crypto. Like the powers that be really hate crypto and they want to crush us. So being too dependent on crypto and how it's going to perform in the future is just asking for disaster, because anytime that there's regulatory crackdown, anytime that there's signs of war, anytime that there's a big security, attack on the grid, anytime there's a market crash, any of that could happen, and it could affect crypto much more than it would any other investments, right? So if you observe something, when you go around and try to tell people you invest in crypto, a lot of them will call you an idiot if you lost money in crypto because you were stupid for even investing in the first place. But when people lose money in the stock market, they always say, oh, it's the economy's fault. Oh, you didn't look at the financial reports. Oh, blah, 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 right? So people come up with a reason. It's okay to lose money when it's in the stock market, but it's completely your fault. You're an idiot when you lose money in crypto. So, everyone has this bias against crypto, including, the powers that be that control the economy, that control the banks, blah, blah, blah. So it's not a good idea to be overly exposed into crypto. Another thing is liquidity risk. So in crypto, there is notoriously a much lower liquidity than there is in traditional stocks or financial instruments. So we all see those stories of traders that turn $50 into like 500,000 on a meme coin, but the entire liquidity of that token is like $30,000. Good luck cashing that out, right? So if you don't know what liquidity is, basically it's how much money is in the entire trading pool of a token. And if you bought $50 and it now says it's worth 500,000, but the total liquidity is only like 30,000, then if you try to sell all of that into one transaction, A, you're going to tank the market, and B, you're not even going to get 500,000 because there's not 500,000 in the liquidity pool. So a lot of meme coins are like this. A lot of them don't have enough liquidity, and I'll pull up an example after this to show you guys what I mean. But that's a big risk with meme coins and crypto in general. Is there's way lower liquidity than in traditional stock instruments. So what's the answer? Again, you want to diversify and you need to have cash flow. So if you have to work at McDonald's, if you have to get a regular job, if you have to work on the weekends with your dad on some construction project, if you have to start a random side hustle on Etsy or Fiverr, you have to do anything it takes to make money outside of crypto, right? Because all you have to do to make money in crypto is literally just survive, right? Anyone who bought Bitcoin last cycle at the highest price, like 78,000, 67,000 or whatever it was, literally, if you just held it and you survived like to this day, you would have been in the money, right? When Bitcoin hit 70,000 like a month ago or something, you would have made money. All you have to do is live long enough. You have to just hold it. You have to survive. You either live long enough to get rich or you capitulate. And if you don't know what that means, it's basically where you have to sell and take a loss on your crypto to pay the rent or to pay off a car loan because you didn't have proper risk management. You didn't have cash flow. So again, you can't put too much money into these things that you can't afford to lose because if things go down and they're in the red when something crazy in the world happens, then you have to sell because you didn't have proper risk management. You weren't making money outside of crypto, and it's entirely your fault. So always be aware of your risk management and have cash flow. This is a pretty good meme that captures it, right? So I'll let you guys read this. Like this was me last cycle. Basically like you just need one more pump, one more pump, and I'm out of the markets. I swear, I'll take profit this time. I swear, right? So you don't want to be that guy. So rebalancing your portfolio to keep your risk levels on target is important for this. And a lot of us really suck at investing and we lose money at investing because we're not robotic enough, right? You have to have no emotions when it comes to this stuff because it's literally just numbers on a screen. Will you take the profit? Yes or no? Are you going to sell this token? Yes or no, right? But because of human psychology, we all get, trapped and entangled in these communities and these narratives, and it's going to keep going up. It's going to keep going up. The Fed's going to lower interest rates, blah, blah, blah. You have to be robotic with this stuff. And like I said, the only way you make money in this is if you survive. So yeah, just keep that in mind. Avoid taking too much risk and putting all your eggs in one basket. And then also think about the long term, right? So I'm not a financial advisor, obviously. So if you do need advice, like speak to some financial advisor in traditional financial stocks to get advice. because all of this stuff will depend on your risk tolerance. It all depends on, how old you are, what, if you have a family or not, do you have a mortgage, right? Like, are you in debt? I don't know any of that stuff. So everyone has a different situation. Everyone has different risk tolerance. So yeah, I mean, it's completely different in every case. So speak to a financial advisor if you have like serious money that you want to move into crypto. Um, it just depends on your life situation. So yeah, that's pretty much the end of this lesson. The moral of the story is to get cash flow, have money outside of crypto, and to diversify outside of crypto, right? Diversify in stocks, in jewelry, metal, a business, whatever. And go touch some grass. Just get offline every once in a while. It's good to have a restart for your mental health.